Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I want to speak about USDJPY because at the moment we really have quite interesting price action and structure on it. So I want to make a complete analysis. Now, starting here on the monthly, what we can see is that at the moment we have seen very strong bullish price action and bullish momentum, with the market printing a series of higher highs and higher lows from a monthly perspective. In a situation like this where the momentum is very strong, we could expect more bullish continuation. However, there is first a possibility for a correction to go and retest the previous resistance turn support. In fact, during this very strong bullish momentum, the last time that the market has seen some resistance is exactly at this level, when it printed this red candle, indicating that now that this market has managed to break above the level, this previous resistance is now turned support, and we can expect a retest of previous resistance turned support before then printing more potential bullish continuation. Now, if we drop down on the weekly time frame, what do we see? Now, here on the weekly, we can see how the market just printed a strong impulse followed by the start of this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we can do that, what we can notice is that the 0.32 of the Fibonacci taken on this weekly impulse is currently lining up exactly at this area that we expect the market to test before then potentially getting rejected to the upside. So this is the first short-term target to the downside that the market is supposed to achieve before then getting potentially rejected higher. Now, going down on the daily time frame, what do we see? Now, from a daily perspective, we can see how the market has just printed this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would like to see is for the market to provide a correction to go and complete the pattern at the neckline, which is previous support turn resistance, or at least you would like to see the market provide a correction to the 0.32 of the Fibonacci taken on the impulse leg, which at the moment would be lining up at this zone. So what we could expect here is short-term bullish price action for the completion of the pattern, and then longer-term bearish price action for the continuation lower to achieve the downside target that we have already identified from a weekly perspective, before then printing the continuation that we already would like to see from a monthly perspective. But at the moment, we're going too much into the future, but this could definitely be a potential way for the market to play this out. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the JPY, we can see how lately net positions have been growing, even though they're very negative. So long-term, still everything negative. We have way more shorts than longs from an institutional perspective. That is why net positions are negative. And we could expect more continuation. Everything that we have already spoken about, looking at the technical side of the market, starting from the monthly time frame. However, in the short term, we're seeing an increase of the net positions, meaning that more longs are getting added, increased from 12K to 42K, and shorts are getting decreased from 120K to 102K. So the JPY is starting to get stronger. Now, a strong JPY is exactly what we need for the market to provide a deeper correction to go and test that 0.32 that we have previously identified on the weekly time frame. So if the market here will actually provide a correction, that would be a very good situation in which we could be then looking for the potential continuation lower. But speaking about one setup at a time, the first thing that we could expect is a correction for the completion of the pattern. So how we could be looking for this potential short-term move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4-hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the completion of this M pattern, at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries, looking from the intraday perspective, looking for potential valid entries, and first scanning for the directional aspect on the higher time frames, then looking at the order flow, and then going on the lower time frames to pinpoint potential entries. That is all part of the mentorship program, which is available on this website, transparentfxtrading.com, in which I break down all the rules of my strategies. And also the mentorship program provides access to other things, like, for example, one-on-one mentoring, VIP market breakdowns, the COT data software, which is the same software which we have just analyzed, the trading station software, which integrates everything that you need as a trader all in one interface. And in order to join, if you scroll down past the testimonials, you will find that there is currently a special promotion in which you pay $297 for lifetime access, one payment, and you basically have the possibility to join Blueberry Markets, which is the forex broker with which I have partnered, that it will refund the mentorship program price in your trading account. And to check out all the details of the offer and to join, just have to scroll down to this page. Here you find all the details and you can join directly from here. And definitely looking forward to have you on board. transparentfxtrading.com is the website. If you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm. And I will see you in my next video.